Hello, my name is True Demon, and I'm the Devil's Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hello everybody, this is True Demon, the Devil's Stockbroker, and this is a long overdue video. I apologize that it's been so long since I've done any real due diligence on anything. I haven't even really been able to make any plays, but hopefully we'll find some time. Today I'm covering BRQS, or Borqs Technologies Incorporated. This is originally a U.S. Delaware company that's since moved most of its operations overseas to China. They are in the Internet of Things space, so they basically create embedded technologies and software for embedded technologies. The latest thing that they've been working on is jumping into the EV space. But that's not really why I'm talking to you about it. The reason why I'm talking to you about BRQS is because the company has seen some extremely negative press and, well, stock trading lately. The entire company's operations, well, they've been based off of some pretty bad financing, honestly. The company's been struggling for a long time, and since they went out onto the NASDAQ, they've pretty much traded in a downtrend nonstop. So let's go ahead and bring us all the way back to the beginning. They IPO'd on the NASDAQ back in November of 2015. And honestly, the best price that they ever saw was just over $10. And it has never really seen that price since April 2018. So the recession hit them hard, and they hit their worst downtrend in the short term down to almost $1 back on the 1st of April of 2020. So the COVID crash kind of doubled down and smashed them again. This company, ever since running into its issues with the bad financing, or rather, ever since running into its issues of, well, lack of money, they've been desperately seeking any way to keep things going. So this brings me to my most recent Twitter thread, which says that BRQS is a lot like Mullen. Why is it a lot like Mullen? I'll show you. So, like Mullen, BRQS has gotten some really unusual volume spikes that occurred over the past month in trading. What really got my attention in BRQS, I've actually been watching this stock for a long time. I've been watching it ever since I started investigating Mullen, which is why this one came up on my radar so quickly before it even moved today. If you didn't see that chart, it moved by 14.5% all the way up to 24 cents from a low of 20 cents. The short-exempt volume in BRQS is extremely unusual because for a stock that's so thinly traded, the short-exempt spikes seem to come at just the perfect time. Note the short-exempts here that made up for 20% of the short volume, or 10.5% of the total volume on the day, came in at a time when BRQS was trading at a high of 35 cents and hit a low of 32 cents, and it closed the day at 34 cents. The stock closed at exactly its opening price. The following 4 trading days, it went and closed consistently lower. And then, of course, a new batch of short exempts came in, and the price continued to fall. And it closed on a day of 24 cents. And then the trading day after that, that's T plus 6 after these boosted numbers of short exempts, the failures to deliver were over 2.5 million. That would account for roughly 9.5% of the stock, between 9 and 9.5% of the stock. That's a massive, massive number. Um, since uh, since the stock's been diluted so severely, now it's sitting at roughly 170 million shares outstanding, or so we think. It's kind of hard to pinpoint exactly how many shares are available on this stock, but point is it's been diluted to death. Um, we've also had several repeating trading signals, such as these batch of days where the short exempts were above 3%. Some days it spiked up to almost 10% on consecutive trading days. Most recently, it's been getting as high as 8%, just in the past few days. But what's tipped me off is that the short exempts in total are spiking, and the short exempts are staying high. And now the stock is starting to consolidate and move sideways, with today being the first real green day that it's experienced in the past month. So, what is going on with it? I'm going to bring you over to this most recent filing. This is an F1 filing released on March 25th for Borqs Technologies. And this one is not so much interesting for what it describes, although it does describe a possible dilution for issuance of up to 82.8 million shares, which are, quote, ordinary, same as common stock. The 42.5 million of them will be issued upon exercise of outstanding warrants, and almost 39.5 million will be issued upon conversion of convertible notes. So these are basically dilutive instruments that the company uses as, in the case of a convertible note, it's basically a loan. The company receives a loan in the form of premium from a funding institution, and that company, once the share price, once the market price gets up to a certain amount, the company that issued the loan to Borqs is able to convert these notes into shares at a discount from the market price of 10% discount on market price. And then that redeems Borqs Technologies and frees them of their loan obligations upon issuance of those shares. It doesn't cost Borqs Technologies to do any of this, and it also does not dilute the stock in any immediate manner. It's meant to dilute the stock later on, once the share price has already reached a certain threshold. The warrants are similar in that they're purchasable and tradable, but they also can only be redeemed once the share price reaches a certain threshold. What's more interesting is the individuals that are currently invested in Borqs Technologies. Although you can read this filing for yourself, you can take note that there's quite a lot of very large companies that were previously invested in. They held significant holdings in Borqs Technologies up until recently. Qualcomm, Ecom Instruments, and Great Call Incorporated, for example, are no longer holders of the company, so a lot of that information no longer applies, even though it's sitting here in the filing. No, what's more interesting is the individuals that are current selling shareholders. These are shareholders that are a part of the registration statement. That is this statement. And these are shareholders which are owed shares by Borqs Technologies as a part of the exercise of convertible notes and warrants that's described here in this filing. So these are the shares that they own here in the shares column, and then the shares that the company, Borqs Technologies, is offering to them. After the offering is completed, the companies will respectively divest completely all of their shares into the market. So this is what's interesting about this are the individuals that are set to make a very large amount of money off of this if this were to play out. The first one that gets my attention is Isuza Holdings. Isuza Holdings, if you noted my DD from Mullen when that one originally was being investigated, Isuza Holdings is the financing organization that provided Mullen with its loans, which we later revealed to be extremely malignant, malicious, and designed to dilute the company to death. Such is also the case with Azusa Holdings, who partnered with LMFA Financing. This agreement was actually established between the two of them. Azusa holds the warrants, and LMFA holds the convertible notes. They supplied the funds for the financing, and Azusa purchased the warrants. Together, these two companies hold a major stake in Borqs Technologies. There's some other individuals that also got my attention. Digital Power Lending, which is actually a subsidiary of Digital Power, Alt Power. I'm sorry, Alt. This company, Digital Power Lending, is actually a subsidiary organization belonging to none other than Todd Alt of Alt Global Holdings. In addition, we have TDR Capital, which also was at one time an investor in Mullen, along with BRR Management LLC. And we have some individual investors, such as Jess Mogul, who I do not know, but Jimmy Fallon, yes, the talk show host, is one such investor, and also the son of Nancy Pelosi, Paul F. Pelosi Jr. All of these individuals have very interesting ties to these entities, and this is going to be the subject of investigation going forward. But I did take note that these are some very, very interesting players that have collectively accumulated more than a 30% stake in Borqs Technologies, at least according to existing holdings versus what would be issued after these conversions are completed. So now we get to the terms of the actual conversion. So the outstanding notes convertible to an aggregate of roughly 44 million shares are at a conversion price equal to the lower of 0.6534 cents. So essentially, as long as Borqs Technologies reaches a price of 65 cents or higher, then these shares are redeemable at a 10% discount. The warrants, which are available in the number of 37.39 million shares, are exercisable at a price of 86.8 cents. So the intent here, as I suspect, is that Borqs Technologies is really desperate to get a total a total write-off on its debts and try to bolster its balance sheet, which they are in a pretty difficult situation because they're currently not meeting NASDAQ listing requirements, which is a serious issue for them. The main issue is that they've been trading below $1 since August of since July of 2021. They were issued a warning in August 20th, 2021. So that puts them at almost 250 days delinquent. So at any time, the NASDAQ could decide to delist them, which is a serious, very valid risk for this company. If you are reading along here, you will note that the company is in fact considering a reverse split in order to get back into compliance with the minimum bid price. This would effectively reduce the float by merging shares in even numbers and bring down their total outstanding shares while simultaneously raising the price by a proportional amount. The total net value of the shares that are held by investors doesn't change. The price rises and the float decreases to compensate, and that would just be to keep the company within compliance of the NASDAQ listing requirements. Upon news of such a reverse split, I would expect that the price would rise as well because the company would be meeting its obligations. But I suspect that they'll want to issue some good news because if they're able to bring up the price just naturally, by increasing the fundamental value of the company in the short term, then they would not need to split the company. They would not need to reverse split by a significant conversion amount. They would be able to get within compliance without reverse splitting too many shares at once. It doesn't really do anything bad, but reverse splitting is generally seen as negative by the market. But at the same time, there are situations where after a company reverse splits and gets back into compliance status with the NASDAQ listing requirements, the stock can move from there because it's no longer at risk of delisting, and therefore it's seen as less of a risky investment. So couple that with any kind of bullish news, any developments on the company's fundamental standing or its balance sheet, those are all good things for the company, technically speaking. It's also worth noting that there were warrants issued in 2017. These are the really old ones, and most of those are far below their conversion requirements. The largest being $12 per share, and the next level being at $5.36. These are due to expire, so it's likely that these will no longer be these will no longer be viable. The $1.25 might, if Borqs Technologies suddenly recovers and gets back above $1.50. Those could be converted, but it's honestly so few warrants that it really wouldn't make much of a difference in the stock's float. So I did follow up on the 6K filing. This is the filing where a fundamental change in listing status is made for the company. NASDAQ did grant Borqs Technologies another 180 days from the date of February 15th to reestablish its compliance. So basically, the deadline is August 15th, 2022 to regain compliance. If it does not retain a minimum $1 bid price for 10 consecutive trading days before August 15th, then the company is subject to delisting. So this is ultimately the goal of the company, to raise its price as quickly as it possibly can in order to facilitate a fundamental change in its listing requirements, get back into compliance with NASDAQ, and restore investor faith. One more thing that I'll cover is that Borqs Technologies moved very, very quickly following my afternoon tweet. I don't know if this was just because of good timing or if because people jumped in after they saw it. I'm not in the business of pumping stocks, but this is a low float, micro float stock, so I'm not going to claim any responsibility here. But it is noteworthy that the stock moved very quickly at the close of business today. So this could have been whale buying. We saw a lot of accumulation early on this morning just based off of dark pool volume. So this may have been the stock moving following those settlements of trades at the end of the day. So this has been getting a lot of attention on StockTwits lately. So the sentiment is shifting publicly, and that's worth making a note of. As of today, this is the current holdings according to Fintel. This is a premium subscription, so this is the most up to date that I can give you on the information. But TDR Capital made a purchase on April 1st, this month. They now currently hold 16 million shares. Azusa has been divesting their shares, but they still hold 7 million. And then there's a couple more institutions that hold less than the 5% threshold that's necessary for reporting. GSR Ventures, who I don't actually know of, they divested completely. They're not a major player, so I'm not sure their significance. There are plenty of other institutions, such as Pathstone Family Offices, and a few others that are minor institutions that still hold some shares, including Virtu Financial. This could be an ownership based on holdings within an ETF, but I'm not sure of it. Either way, it's not a very large sum of shares regardless, so pretty insignificant. One last thing to cover is, of course, the short interest. So short interest in BRQS has it's honestly been pretty negligible, all things considered. There's only 4 million shares currently held against it, and shares short of the float, it's like 2.5%. It's not a lot. But what really got my attention was that the 2 trading days after this big move on the 14th of April, when it went from what was this? The opening price was at 20, a little less than 24 cents, and it moved to a high of 24.75. So that was a big gap up for this stock because it had closed the previous day at 17 cents. So it moved by a whole 6 cents on the from one day to the next, right before an expiration date for options. But this one doesn't, or I'm sorry, it was options expiration. Why am I calling this out? Because this stock doesn't actually have options. So there's plenty of examples that I could draw this from in the market, especially with recent events being what they are. But stocks that trade like this, they're heavily shorted or otherwise. If there's a large position by market makers, if they have to hedge for anything, they do so with options because options provide them with the greatest amount of leverage and also flexibility. Stocks that do not have options traded on them, if it is not an optionable stock, then the market maker must negotiate its positions solely through shares. It's the only way they're able to operate, and it's the only way they're able to hedge. That heavily restricts their ability to move the stock in any direction. This is where retail can take control of this and actually put pain on market makers in a way that they've never been able to before. The reason for this is because without the power of options, one, market makers do not have access to sell calls and puts to gain liquidity to get control of the stock. Two, they cannot cause a loss of equity value by retail shareholders by pinning the price. They can pin the price if they want to, but it has no effect because the options don't matter. And if they bring the share price down too quickly, it can trigger bulls stepping in order to buy the price back up if sentiment is euphoric. So psychologically speaking, if the market maker makes the wrong move at the wrong time, they can actually shoot themselves in the foot, especially if the sentiment on the stock is overwhelmingly bullish and they keep trying to regain control of it. Here's the other part of it. We know that market makers are involved in this one because the stock has been trading consistently above 1 million shares in short exempts volume. Now, that's not a lot right now, but notice that the short exempts spiked on April the 14th, and then on Monday there was a whole bunch of short interest that came in out of nowhere despite the price moving up. That is a signal that market makers were hedging in order to keep from failing to deliver on stock. If they use those short exempts in order to keep control of the stock and they failed and the price moved up against them, they're going to take out borrows on shares so that they don't have to return them right away. If the price continues to move up consistently, what the market maker will do is they'll keep borrowing and borrowing and borrowing and borrowing. And as they accumulate this net short position, if they cannot return to a net neutral position, they're going to be forced to buy shares because they don't have time to get tied up in a stock like this. It is thinly traded, so the market maker is somewhat obligated to facilitate the market, but they're still not going to they're not going to waste time taking and holding a net short position on a stock that could run against them unexpectedly. They're going to try to stay net neutral. If the stock moves quickly enough against them, the market maker can take a massive loss. But if the stock moves up slowly due to retail buying and euphoria, as the market maker continuously tries to keep the price down and keep it controlled, facilitating all of those purchases through short exempts, they basically accumulate a net short position that then becomes over leveraged and puts them in a position where they must purchase the shares elsewhere. So, what is the possibility here if if this trend continues, if BRQS naturally moves in its price upward from where it's currently sitting at roughly 24 cents, and it continues to get that slow churn upwards towards 50, 60 cents, then the market maker will be 300% at a loss. The additional key to this is that as they do this, short interest is likely to continue piling in on the stock because it's not very highly utilized. There's very few shares borrowed for shorting right now. The estimated short interest is not perfect, but we can give ourselves a reasonable level of confidence that the shares borrowed against it are between 4 and 6 million. If this continues, then it will actually this is actually a situation where retail can squeeze a market maker entirely just by buying and holding. It's one of those situations. This is the same thing that happened to Mullen as well, by the way. The difference between BRQS and Mullen is that Mullen had options, BRQS doesn't. And I think that actually plays into the favor of retail because just purchasing the shares actually has a direct effect on the price. And purchasing call options, it may create a gamma squeeze situation, yes, but it also works against you in the short term because if the market maker is able to use that liquidity against the stock in order to pin the price and deplete options equity value, then it actually hurts the retail investor if they're constantly buying weeklies. So it's actually not a good thing to be constantly draining your cash into weekly call options that expire worthless every Friday. If you turn it around and you're just buying shares, if all of retail is just buying shares, then the price moves up against them and the market maker has no options in order to hedge those. So this is a unique one. So in any case, that pretty much does it for this DD. I'm going to continue to do some more investigative work into this one and keep people up to date as best I can. Please remember that this isn't financial advice, and I'm not a financial advisor. I'm just calling out these plays as as I see them. I see value, and I'll call out value as I see it. In this particular case, I do want to warn people and be very, very explicitly clear. This is a very high-risk trade because there's a time limit, a very clear time limit on if this stock can get above $1 in order to satisfy the NASDAQ listing requirements. There's a lot of things that can happen between now and August. So know that that risk exists. Always understand the risk. Also know that this company is now currently moved into the Chinese market, so there's a lot of control that the Chinese government has on this particular company that is going to be outside of the control of everybody, retail or institutional investor. Whatever the Chinese government decides to do could affect this stock in ways that nobody can foresee. So please take all of this information with a grain of salt. Please use caution when making any investments, and especially in penny stocks. This is one of those situations where it can move by huge sums if all of the right things transpire to make it happen, but it could also result in a whole lot of people getting washed out of their entire positions. So as I said, do your own due diligence. Please be careful. Make sure that you only risk what you are willing to lose, and don't ever treat any investment as if it is guaranteed, because there is no such thing. That's going to do it for this video. Thank you guys so much for watching, and I'll see you next time. Have a hell of a time in the markets.